So basically from the top, this video chat series is sort of a playful way of kind of, let's say, celebrating or satiring the idea of working from home that we're all going through right now. And it allowed me to touch base with more and more people and just, aggregate the market sentiment of what different individuals in the real estate space are experiencing as a result of COVID. And so I guess the best place to start would be if, for those who don't know you, if you could introduce yourself and give me a little bit of a background on how things have changed for you, let's say, since the beginning of the year.
Sure. And I think there's no better way to satire this entire situation than to interview from a basement apartment.
Yeah.
So welcome to my world right now. But for those of you who don't know me, my name's Cam Woolfrey. I'm a residential real estate agent, primarily working out of downtown Toronto with LePage signature. Consistent with a lot of the people who have brought insight to this video series here. I started in real estate going to the University of Guelph in the real estate and housing program. Since then, taken a multitude of jobs, mostly with CBRE. Worked primarily in the office and industrial sector. I worked for the research department for a little time, but then transitioned about 5 years ago to the Toronto market to focus on residential sales. So it's been a journey over the last 10 years. Doesn't seem like it's been that long, but ultimately started with the University of Guelph and has led to here. For some reason, I'm still doing it.
Yeah. It's how have you found it? Like, I think I'm kind of one of the few others from our program where I still touch a lot of res, but with the commercial background, like, I did most of my co-ops at institutions or at CB as well. You find it gives you a little bit of an advantage? I guess in a time like this, it probably seems that way.
Yeah, I think so. I think you're not only used to dealing with, higher pressure situations, but also having the research background and being able to look at the micro and macro data and say, what possibilities does this lead to? I don't think people within the residential courses, or at least the education system that exists there, have that type of insight.
Right.
It also allows you to see how these markets play into each other as well. I mean, we'll probably touch on at some point, office and retail playing into residential down the line is something that it's worth considering. It's worth taking into account when you're trying to predict how things are going to go for certain people. So, to backtrack and say, how have things changed for me from a typical day before this to after? I mean, because I focus primarily downtown Toronto, we do a lot of condos, we do a lot of freehold sales, and I'm working mostly on the buy side. My 9 to 5 or probably 8 to 8 was pretty hectic in a buyer's situation in downtown Toronto. I mean, as you're probably aware, most properties pre-COVID or even over the last 5 years, you got to see it same day, put in an offer, have your due diligence done, and get everything done within a 24-hour standpoint. But now things have calmed down a little bit, depending on the asset class, and it's more of a, consume the information, try and deliver it in a way to somebody that it makes sense and allows them to come up with an appropriate strategy. So it's switched more to an advisory role rather than me schlepping around Toronto trying to show properties all day.
Yeah. I mean, that's nice, really. I think that it creates a greater level of demand for guys like us where, you have the ability to assume that advisory role. You're not just a door opener, an order taker, right? How much of that perceived slowness that you're describing is a function of, like, how much of it is organic decrease in demand or decrease in supply, and how much of it is like restrictions on what we can do, like, lack of open houses or some condo boards not allowing showings during this time?
I think it's tough to say. Well, it depends what we're talking about, this resale market, rental market. The rental market, this was kind of already going to happen with the Airbnb rules that came in. There's going to be an influx of supply. It's just you counterbalance that with the lack of immigration and non-permanent residents that have bolstered the rental market for so long too. And that has just made the situation a little bit more dire than it would have been. But in terms of the resale market, I think a lot of it originally has been consumer confidence. People have reservations about going through random people's houses. And I think a lot of people are just sitting back and waiting, whether it's on the buy or the sell side, to try and get some sort of hold on where it's going to go. Because there's just so many factors at play where it's tough to, from an individual level, depending on your situation, have that confidence about where things are going to go, depending on what you're looking at. It's important to look at it, the big picture, but also focus on these small areas to really come up with what makes sense.
Yeah, it's crazy. Like the information right now, right? You've got, CMHC saying as low as 20%, and then TD saying as high as 8% right? So
And everybody, you've got this complete, not disconnect, but everybody's got a different opinion about how they see it playing out. When you're
yeah,
talking about CMHC, I think they predicted, once mortgage deferrals are no longer a thing, they're saying, oh, 20% of people are going to be in arrears. And we've got Bank of Canada saying, oh, no, it's only going to get up to 0.8%. So, there's a huge disconnect there. I'm sure the reality is going to be somewhere in between, but it just shows you how unprecedented everything is, because nobody really knows how to interpret the data and how things are going to play out going forward.
yeah. I mean, again, I think we had mentioned this before. It's unprecedented, right? Like, and I know that now we're seeing an unprecedented use of the word unprecedented, but like there's really you can't compare this to anything that's ever happened. And so I guess what you were saying before is like the best thing that you can do is gather as much information as possible and start to try and basically, you know especially for the advisory role that you're describing, how do we figure out what our clients are thinking and what sort of, let's say, investment thesis that they might be going towards, and then how do we help them piece together a safe way to do that, right?
Yeah, and it's worth noting too that the Toronto real estate market has been a bit of an anomaly before
Yeah.
GTA as a whole. I remember when I transitioned from commercial to residential, everyone was advising me, at least the mentors that I worked with at that time. They said, if you're going to Toronto to sell residential, you're out of your mind because the market's going to crash next year.
Yeah.
And I don't think people were anticipating the amount of immigration and demand that was brought on by that. And it's tough to see how people are going to react going forward, and how much this is going to impact people's buying power and the economics versus the subjective side of residential real estate, for sure.
Yeah. No, it's a good point. Do you think that do you think that it's strong enough to weather the storm of all of this macro risk? Like, I mean, making the assumption that some of these, like immigration, actually, I think hasn't been that severely impacted. At least on the processing side, like the number of applications are the same. So
Yeah,
the macro piece that I thought was going to really come into play, which was people not being able to afford to move here, might not be as apparent, but obviously travel restrictions are going to pose a problem in the short term.
right, absolutely. And that just causes kind of a delay. And I
Yeah.
think something that doesn't get talked about enough is, what is the international consensus about how Canada has dealt with this going forward? I think,
Yeah.
regardless of your political opinion, the way that all levels of government have worked together to get money out to people, provide that stimulus, even though it creates an issue down the line in terms of, how quickly you're going to be able to recover that, it bodes really well for how people view Canada, Ontario and Toronto as a whole as an international investment destination. So I think that factor alone is something that's incredibly positive going forward. And I think also when you hear a lot of the different economists speak, they talk about, yes, we will be going through some tough times, but the long-term prospects for the economy and Canadian real estate as a whole are still incredibly positive. So I think that there's a couple different ways that it could react in the short term, but in the medium to long term, which is typically how you should be looking at a real estate investment anyway,
For
uh,
sure.
things still look pretty positive. So that's the light at the end of the tunnel.
On that note, actually, because I really am happy that you said that. I mean, I'm always saying to most people, when they're like, "Oh, well, I make money in 5 years on this deal," I'm like, I'm not the guy to be asking that question to. I'm like, I don't even really ever advise clients to sell their properties. I'm like, if you have equity in it, like refi and buy something else. And if you can't afford to, then you're probably not. You shouldn't be even considering this thing anyway. So on that note, do you think that we're starting to see a better an alignment with reality a little bit, because Toronto seems to be kind of like Silicon Valley, like with this detachment from fundamentals. Real estate just like has completely transcended what should be normal. Seeing people buying at like -2 cap rates. Like, are people looking now and remembering that real estate is a 5 to 10 year hold, or sorry, or a 10+ year hold, not a 5 year?
I think they are now, at least in my experience. Everybody has come back down to reality. They've certainly become less aggressive, and the way that things have gone over the last couple of years is people have priced in presumed appreciation into their assumptions, which doesn't make any sense, and has to cause long-term problems, right? So that's something that, as a professional, has kind of worried me long-term. I also think that people have a really short memory, so I'm hoping that when things get back to some level of normalcy, people won't, go, oh, let's forget about what's happened here and just go back to the same things.
Yeah.
I don't really have an answer for it. I hope in the truest sense that everybody comes back to reality and tapers the market a little bit, but it's going to be interesting to see.
It is tough to say, right? Because like you're seeing the what you're describing, where people are basically buying in that they're pricing in that spec, was what happened in 2017, right? In York region and other areas of the GTA with the single family detached pre-sales. So you'd think that we'd learn from recent history, but who knows?
Well, anytime you see that sustained level of unsustainable appreciation, there's usually a correction that occurs, and obviously nobody saw this coming in the way that it's played out. But even in 2017 with fair housing, that caused the correction that was ultimately needed for the market at that point. It's unfortunate that some people get caught in it, and there are real capital consequences for people. But when things get out of line, the world and the economy usually has a way of leveling it out over time.
Yeah, I would say that. I mean, I think most people who are purchasing in the Toronto market are at least somewhat aware of the risk there, that like their investment thesis is completely wrong. And I mean, if we do see CMHC's forecast come true of -20%, like I think I'm gonna guess, just because the properties are more numerous and also at higher values in areas like Toronto and Vancouver especially, the majority of that suppression or deflation in value is going to come from those two urban areas, I would suspect.
Yeah. And I would take it even one step further and say, the condo market and the luxury market are the most exposed. Anytime you have, any kind of loss in buying power that's this great, those are the markets that are the most affected on the residential side of things. Typically the people who, either have multiple properties or are able to liquidate and just get out of it. So the interesting thing to me is going to be how much supply is going to come back to the market in the short to medium term, because I don't think it's going to happen until, if I were to take a guess at it, I would say in the fall you're going to start seeing properties come back to market. And you look at what's happening in the pre-construction markets and try and counterbalance that with the lack of supply that already exists. The X factor is going to be, has consumer confidence returned? Is there enough demand to cushion that blow? Because I don't think anybody's sitting there saying, there aren't going to be consequences to the people who aren't going to be able to make payments and are going to have to liquidate. So further that, when we're talking about, a come down to reality, I think it's a good thing for the market as a whole going forward. It's something that needed to happen. But again, it's something where, if you've bought at a price point that's unsustainable, you might.
That's the tough one, right? It's like, I would agree with you. I think that everything that I'm seeing so far and everything that I've read alludes to the fact that we could see a healthy market finally, like, greater affordability, greater accountability, and just a sense of reality and a sense of, acting in congruence with what investment principles should be, which and I guess the other CMHC piece is that they're contemplating doubling the minimum down payment, which, I mean, the net effect of that is actually really positive, but it obviously doesn't make housing more affordable or accessible to anyone.
It's one of the interesting things to me, and I don't know, this is probably spiraling too far off topic, is how real estate in these downturns in economies, it just creates wealth gap. You know what I mean? Like the people who can sustain over time are able to snatch up more real estate and continue to reap the benefits of it when times are good. And the people who can't have to liquidate, and therefore, that gap just widens. So I think this is a prime example of that, and we're going to see that in the long term, but it's not uncommon, or it's not something we haven't seen before.
Yeah, I would agree, and I would definitely say there's no such thing as being too off topic. So that's a rabbit hole that I'm down to go to get into. But on that note, I think that you start to see this wealth disparity evolve as a result of assets during times like this, especially because, do you think that a lot of that is a function of the stimulus, of liquidity being added to the markets? I mean, maybe not so much in the U.S. respect, like, because with the bond repurchases and all of that, or is it just organic? Like,
I think it's more organic than anything else. I mean, we'll see what happens on the inflation side of things because of all this stimulus and quantitative easing. But I think that regardless of how it's happened in the past, it always ends in that same result of those who are able to weather the storm come out on top.
Yeah.
Yeah, I think that would be the safest answer I could put forward there.
Okay. When I spoke with Anson from Pinnacle a couple days ago, the audio's out now, but the video will be coming out today. He talked about how, you know, he could really see like location becoming a more important piece of the puzzle. Like people aren't just going to blindly throw money at any project in the city. Do you feel the same way? I mean, obviously he would have a bias there, and I don't mean that in a negative way because they have probably the best location in the city right now. But
Yeah. Well, I think I agree with that. I'd take it one step further, and I'd say asset class is becoming more important.
right,
Freehold and entry level, you know, like townhouses, any way that somebody's able to level up kind of on the scale of what has been historically preferred. You know, there's a scarcity element to all of that product because really in the GTA, you can really only build high-rise condos at this point to meet the demand or meet the supply that's required. So I think on the condo side of things, location's important, but also, you know, floor plan and having balcony and parking, just these things that people were willing to overlook a couple months ago to get into the market. Now they're saying, well, now we got a choice.
right,
So I think that becomes incredibly important, and that's how I advise my clients and have been for pretty much since I got to Toronto. Is just saying, hey, if you're going to buy a condo, there's a foreseeable ceiling to this at some point.
yeah.
So you better have an asset that's going to stay liquid in those times. Otherwise, you're probably going to experience, you know, lower lows than anybody else.
Yeah, I would say that's sort of like that's the big one is buy something that, like, even if it does go down 20%, and that's always been my advice to people. Like I was like, look, at any point since my career in real estate, it looked like things could drop off at any point, right? Like because it was just growth, growth, growth. And
Yeah.
I was like, if you're gonna buy this, make sure you're gonna buy it, and you'd be willing to hold on if it dropped 20% in value, and you know you got 5 years to recover that by the time your mortgage is up for renewal.
Something that's been a failsafe, at least for on the residential side of things, is, you know, be close to major transit and be close to major commercial development. Now, you know, the office side of that things, who's to say how that's going to play out in the long term? I mean, there's lots to talk about in terms of how the office is going to change going forward. I personally don't think it's going to be as drastic as some others that I've heard. I think that, you know, there's a mental side of it too, where people need to be able to come into a place to work. How drastically are people going to reduce their floor plans? What's that going to mean for a lot of these downtown commercial developments, land values, everything else that's associated with it? So,
Yeah.
yeah, I think that's going to change how urban centers are planned as a whole, which is going to have an impact on pricing.
Yeah. Yeah, I would. I'm very curious to see how that plays out. I think that consumer sentiment will drive it. Like it looks like companies are evolving towards giving people the choice of whether or not they want to work from home, and I suspect that more and more people will choose not to,
Yeah.
because like you need like the way most people live, they weren't prepared to have an extra room in their home, right? A workstation in their house. So it's not a short-term thing.
Yeah.
Yeah, like the adoption of it, I think, is a more long-run cycle. It could
And
happen, but
I think we were headed that way anyway. I mean, you talk about the way that a lot of office tenants and landlords were reacting. They were trying to focus on, you know, open concept, well-being
yeah,
type layouts, and it's just accelerated the whole process to the
yeah.
point where I think everybody was ready for it yet. But we'll see what it means going forward.
Yeah, it seemed to catalyze a lot of change that like everybody sort of saw 10 years out, but like now it's like boom, you got to do it now, right? Like even this Zoom and you know, like some of the older guys in our industry now using technology they probably never would have before they retired. So
Fun to watch, really.
yeah, it is fun. It's really interesting.
Yeah.
How do you find yourself advising, like, generally your clients in a time like this? I know you touched on it briefly, but like if I came to you and said, look, I want to buy a condo in the city right now, what are you saying to me?
I think, I mean, not a lot has changed for me. I've always been pretty risk adverse in Toronto market. That's as crazy as it is. It's tough to react that way. You have to be realistic about what's currently happening, and then also say, listen, we don't need to get out of line, but here's what you need to do to get it. But my advice is now that you need to price a certain level of risk into what your assumptions are. If somebody, match a buyer's situation up with a seller's and try and do a deal that makes sense for both parties, because there is a disconnect between agents that think everything is fine and prices have continued to appreciate, and those who say there is a real risk here and we could probably do a deal that makes sense for both of us. So I try and match those situations up, and don't let people get too emotionally invested in something where the numbers just don't make any sense, because as you're well aware, I mean, residential real estate does carry a certain level of emotional attachment to it, and acting irrationally because of it. So a lot of that is, like I said, based on area, the type of asset you're going after, having a certain reduction or a certain risk level built into your pricing assumptions. Other than that, it's business as usual. I'm trying to be as honest as I can about what the possibilities are going forward, and just allowing people to come to their own conclusions about what they're comfortable with. Because you don't want people to be buying real estate is sometimes stressful. I mean, there's no denying that, but you want people to be as comfortable as possible going forward, especially when everything else is so crazy.
Yeah, no, I think that's a good point. Like, I think realtors get demonized a lot, for like the whole pump and dump philosophy of real estate. But it's like, I think people are entitled to their own investment thesis. And I think people who are smart in sales will understand that and say, look, like, I will find something that fits what you believe is going to happen in the market. I will find you the best thing to fit that. But here are my arguments against your investment thesis, and I would encourage you to have an open mind about it. I've never really had a client who's severely suffered as a result of an investment, but I mean, it happens, right? Everybody can do what they want with their money.
Yeah, absolutely. And all you can do is advise, and as long as there's an understanding and an open conversation that you're able to drive, I think that's the healthiest relationship you can have. And I know that ultimately, like, I'm a salesman, but I don't really look at myself that way, because most of my clients are going to buy either way. They're just looking for somebody who's able to guide them to make those right decisions, and provide a perspective that's maybe a little bit outside of what they're used to.
Right. Yeah, for sure. On that note, how do you find yourself like advising coworkers, other agents? Like, what would you be recommending for them to do to make the most of this situation?
I mean, stay present. I always think that information is always king when it comes to situations like this. Things are changing so rapidly, so you have to stay very present to both what's going on and what data is coming out, and taking everything with a certain grain of salt, understanding how much discrepancy there is in the data that comes out. I think having honest, or I would advise people to be as honest as possible in dealing with their clients, and not promise anybody anything. That's something I would say regardless in sales, is you don't want to talk out of your breath. And when I look and see that chief economists don't even know what the hell's going on, it puts it into perspective that you just need to take all the information that's available and lay it out, put it in a way that's easily digestible, and continue telling people that like, things will be okay eventually, theoretically. I mean, they usually are. Yeah. And if they're not, we got bigger problems to deal with than real estate. So I think it's important, just to be honest, and just to be the most knowledgeable person in the room.
For sure. Actually, I'm glad you ended with that knowledge piece, because you mentioned a couple of times throughout that information. So what kind of information are you digesting right now that you could point people in the direction of to sort of form a better opinion of what's going on in the market?
If I was going to point to one specific place, I would say there's a company called Urban Nation, owner Sean Hildebrand, who comes out with a lot of very, very good data about not only the condo market, but the GTA residential market as a whole. I would say that you want something that's unbiased, and in my experience, it's a private company that works on a consulting basis. I would take a lot of the presentations that he gives, and honestly, I regurgitate a lot of it, because I think that it paints a perspective that isn't driven by sales. It's just saying, listen, this is what's happening. Here's what we expect to happen. Here are the possibilities, and it covers a lot of the whole spectrum of what's going on, as opposed to picking a single track and saying, this is what we think is going to happen, because you have to be aware of all the other possibilities based on how things are going to react both now and after this is all said and done.
Mm-hmm. It's a very good point. Yeah, I think that the objectivity is hard to find, right? Like, and now I don't know if you've been following it on Twitter, but like Evan Siddall and Remax are like at each other's necks on. Oh man, I thought he would have learned from the last time that he engaged on Twitter and started allowing people to like and answering questions on a thread. The poor guy, man, he must have wasted an entire day of his time just catering to that thing. But I just think it's interesting to see like this dialogue, this public dialogue with brand names attached to it happening around the real estate space. There's like, I don't know, it's
Well,
really wild, man.
it's kind of crazy to see even across the world too, the lack of togetherness in terms of people's opinions about the virus as a whole. You know what I mean? Like I never thought I'd see that. I thought it was something like this, it would be pretty black and white. Like, hey, we gotta do what we gotta do. And then you've got so many different sides of it that are saying, this is what's important. And
it's weird too, because like you can kind of apply like these like little subjective anecdotes to things like that. Like if you go to a T&T grocery store, which is an Asian grocer, they take safety standards a lot more serious. Like I've felt more comfortable there than anywhere else. They scan your temperature when you walk in. And you could say, okay, this makes me more fearful because they're taking it a lot more seriously, and the first cases happened there. Or you could say, this is what's necessary to successfully suppress it, and they're doing the right thing, and maybe we're not, and that's why I should be scared for that reason.
Yeah.
I mean, the whole thing's all over.
You look at I'm trying to look at like how other countries have dealt with it. You look at a country like Singapore, and one of my buddies that I was talking to brought it up. He's like, well, you could say that you could do the same thing in North America, but I think there's more of a social responsibility in those countries that they've already had going into this. To keep everybody else safe, where it just doesn't work in North America because people are a little bit more, I don't know, egocentric or whatever it is.
Individualistic. Like I think it makes a pretty strong case for authoritarianism right now, right?
Yeah, before we get too deep into that, I realize that having a really voiced opinion about this, I'm happy to have discussions about it, but the more I voice my opinion, the more people go, you're wrong. Okay.
Yeah, and it's like I think you're right. I try and stay away from all that stuff, like because it distracts from what, like I'm not remotely qualified to be discussing any of that stuff, and like so it's like it's not the kind of conversations I want to have with clients or with colleagues or anything. Like I'll talk about the stuff I get. Yeah. Is there anything that we missed that you want to chat about before we sign off?
Maybe the pre-construction market. I think that's going to be pretty interesting going forward. I know that just looking at the amount of completions we were supposed to have, because what's driven the condo market over the last little while has been just a lack of supply, and we were expected to start to get a handle on that over the next 5 years. But there's two risk factors that are immediately present, and one is you've got about 4,000 units that are scheduled to be finished, I think this year or next year, that are 2+ years old. So they did their pre-sales before site plan approval, and they're all sold at like 700, 800 square foot. And development costs and construction costs have gone up so much that it's like a lot of those projects are probably not going to happen. And then you've got the consumer side of things, where depending on how much money is lost, people have bought these pre-construction projects at 1,800 a square foot or 1,500, and they're not going to be able to meet their debt schedules. And goes to the developer, they can't meet their draw, and what does that mean? So I think that if people are looking at a condo as an investment, that is one thing that is likely going to be pushed down, or the can's going to be kicked down the line a little bit in terms of when we're going to figure out the supply issue in this city.
Right.
What do you think?
So, what's that?
I said, what do you think about that? I don't know.
Well, there's so much to unpack. I don't know where to start. My big thing, like my fear is at what point in the equation does it become systemic, that risk? If value in a sideways market, let's just say, because I don't like to forecast in either direction on price, but I do think that there's room for a correction from the growth that we saw. But let's just say prices don't grow, and all of these units that we're supposed to close in 2 years, 3 years at 40, I don't know, I think the highest one is like 35% above fair market value over in downtown East. I can't remember, but
someone wanted 2,000 a square foot. It blew my mind, but anyway.
Yeah, but let's say 30% above market, right? So now every month that goes by with no growth, you're losing, your risk profile increases. So all of a sudden you decide to stop paying your deposits and walk from the unit. the 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 developer can and probably will try and sue you at some point in the future for potentially the lost value or keep your deposit or whatever. But does the deposit, like if that happens in a whole building, who who loses? The owners, maybe the deposit insurer, the developer, the lender. Like, at what point does this become where there's a systemic risk? And maybe, like, I don't know if it's a question you feel qualified to answer, but
I don't think I am qualified to answer it, but I think I can. So I'm going to try and answer it anyway.
that's what it's all about.
Yeah, exactly. I think that a lot of the pricing, I don't think the pricing has been completely out of line. Like, you look at a building like the Well, for example, I think it's priced about $13.50 a square foot, or even less than that when original presale came up. A lot of those major developments are at a point where even if there's, flat growth or slight reduction or whatever it is, they're not to the point where people are going to be looking at that saying, well, it makes more sense to just bail on this than it does to just close on it and hold. And there's a lot of developments like that are at that $1,400 a square foot in markets where resale is $1,100-1,200 already right now. So I don't think that gap is so large. It's the ones where it's $1,500 and above, where the market was going to have to continue to appreciate 20% a year for that project to make sense. And I'm going to be honest with you, I don't sell a lot of pre-construction for that reason, where I saw, outside of the charges you're going to have to pay on closing, outside of the quality that's going to be a question mark, the changes that you can experience, it was that, there's this prospective pricing that just didn't make sense in my mind given what was going on the resale side of things. So I don't know if it's going to become something that's systemic and have, a kind of a domino effect, but based on what I've heard from people who are more familiar with pre-construction than I am, is they don't see that happening on a wide scale. It's more going to be individual projects, and it's not going to have this catastrophic effect that's possible in the situation that you're describing. So,
right, yeah, I hope that's the case.
Is that true? Yeah, who knows?
No, I think that's actually, like, I think that you see, like, a lot of the catastrophic bearishness, especially on Twitter, and I don't know. I mean, I think that it's not too, like, I think that this stuff could happen, but I think that the government is going to do a lot to make sure that it doesn't. And I think that, like you said at the very beginning, policy is really going to decide whether or not this, and we've implemented a lot of, like you described, the fair housing policy that can very easily be stripped away. I mean, even like the foreign ownership tax, like, if things really get to, the desperate times, there are measures that we could go to pretty easily stimulate the demand pool in real estate.
Yeah, and I think it's going to be heavily dependent on government intervention, as the beginning of this has. So too will the end of it, because with the deficits that they're being built, what's that going to mean? Is there going to be a capital gains tax on which particular assets? You got to find a way to get that money back. So there's just so many question marks going forward, and I'm sure that's been kind of the consensus with most people you've talked about. It's like, let's wait and see. Let's make sure that from an advisory standpoint, you're being cautious and not overly optimistic, and take information as it comes and try to react to it.
Yeah, I think that there's so many variables as well, right? Like, even interest rate, like, if they drop the interest rate again, which most people are saying they don't think is going to happen, but I don't know, like, anything could happen at this point. But, like, a lot of people forget the detachment, the attachment of the interest rate to basically our currency, right? That, like, you can functionally devalue the Canadian dollar, which not only does it create greater demand by making debt cheaper domestically, but it also makes foreign demand increase because the greenback now has greater buying power in Canada, right? So that's like a double whammy. The net effect of that is a slam dunk for the government.
Absolutely. Yeah. And it's easy to focus on, and not that you are, I'm just saying it's easy to focus on one thing and develop a situation that's either positive or negative on how it's going to play out. But I think, we're kind of proving throughout this conversation that there's just so many factors at play to determine how impactful each of those is going to be. Is something that's next to impossible to do right now. So,
for sure.
Like I said, from an advisory standpoint, it's more just, let's take all the information, let's look at it, let's talk about how we see things playing out long term on an individual basis, and that's pretty much my mentality going forward, at least for the foreseeable future.
Yeah, I've sort of been the same way. It's like, okay, give me the assumptions. Like, tell me, like, let's sit down and have a conversation about what you think is going to happen in the world right now, and we can and then, okay, well, here's the economist that sort of had this similar philosophy, and they think prices are going to go up 8%. So if you're most aligned with them, then you should be, lever everything up and buy on all your credit cards. Like, but I mean, most of my clients don't have that perspective.
And you know what, same here. I mean, the people that I'm working with right now who previously were looking to get into entry levels at like detached and assets that I think long-term are going to perform well, I'm saying, you know what, it's pretty tough to time the bottom of a market. If there's a property that's perfect for you, if we can get, an inspection clause, financing clause, things that weren't given to you in this market before, then it starts to make some sense at that point, because at least you can make up for whatever difference if the market does go down. You've got these assurances that you're not buying an asset that's going to completely flop on you amidst that. So
for sure. And then, I mean, there's also like historically low interest rates, right? So like you can save a lot of money, like even if you buy a year from now and you don't know what interest rates are, not only the opportunity cost of renting for that extra year, I mean, assuming they're not living with their parents, but the opportunity cost of renting for an extra year, plus the opportunity cost of the greater interest. I mean, there's always, like, that's the thing, is it's so subjective, right? There's no right answer. But like, if you were just buying, like if you were an investor who has cash on the sidelines right now and you're just like, okay, I'm gonna wait, or should I wait, or should I buy today? I'd say probably wait, but like I'd say wait a bit.
Like I've said to a lot, and I work with a lot of investor clients who, whether they're looking at condos or freehold, I've just said, listen, you need to match up with a situation that makes sense. Don't be forced into buying something that doesn't make sense from what our risk profile is right now. And if something comes up and somebody needs to get rid of a property and you're going to get it at a bit of a discount, absolutely, it could make sense right now. But always on a case-by-case basis, and it's got to be something. I think the consensus for my guys, if I could say that again, is that you don't need to be forced anymore to pay ridiculous prices, and that's a good thing for the market as a whole.
For sure, I agree. That's a healthy market, and I think that like the idea of needing capital appreciation came from not having cash positive investments, and I think that that's slowly going to erode. And like people always ask me like, where's the price floor? And I'm like, well, if interest rates are low as ever, like it's not like there's a better place to put your money. And the stock market is like, I mean, I guess it's performing well right now for liquidity, but like guys are going to go put their money into properties at 3 or 4 caps because it makes sense, even if they don't see appreciation on the horizon, right? Yeah. So I just said like, look, let's say we're at a -2 cap on certain condos right now, but like, okay, they can drop to a 2 or a 3 cap rate without like people getting destroyed and lives being ruined, right? As long as the fundamentals, like the rents and stuff, don't get eroded too much. But that absorption happened fast. Like I think we probably already hit the bottom on rents, right?
I think most people around my industry are talking about, I think we've reached the bottom of short-term pricing on both rents and even on the resale side of things. Are like, you know what? Interest is back. I mean, we're seeing multiples on freehold again. We're seeing probably sell in a day or two is if the good assets are trading. Yeah. And I don't think that's changed throughout this entire process, really. But I think that going forward, rents are going to be a big part of that too. The Airbnb thing was something that I was looking at going into this year, going, I think we've already kind of hit our cap and how much somebody can afford for a 1-bedroom apartment downtown being like $2,500 a month.
Yeah.
So, and there's some positive to it, but
did that supply flood have as big of an impact as you thought?
Yeah, I would say it was in line. Like, and it's building by building too. I could use like the ICE condos, for example.
Yeah, ICE is the famous one, right?
Yeah, exactly. And there was immediately overnight probably like 150 rentals that just popped up there.
Crazy.
And, they're going to get absorbed. It's going to take some time. As you mentioned, immigration, at least from the processing standpoint, has been consistent. So you got to think that a lot of people are going to want to be in the core. You would hope that at least softens the blow from what's already happened.
Okay. Okay. I want to be mindful of your time. So is there anything else you want to inject? And if not, where can people reach you if they want to reach out about, investing in Toronto or whatever it is?
I think the best way to get a hold of me is just give me a call. You can check out our team website, part of the Story Team, so storyteam.ca. but just giving me a call. I don't know if you want to flash it there, like an late night
Yeah, I
infomercial.
usually put it in the show notes on the podcast or in the notes on YouTube as well. But I can try and do a flash for you. I try and limit post production, but
But yeah, I like having these types of conversations, and this is a pretty deep dive into how I react with my clients. Anyway, I mean, this is kind of just another day for me. This conversation is pretty much exactly what I'm doing with the people that I work with. So, yeah, give me a call, I guess, is the answer there.
awesome, man. Okay, that's great. I'll make sure to include that information, and I want to thank you very much for your time. I really appreciate it. I think it's gonna create a lot of value for people, and I think you've I actually forgot to get to the pre-construction piece, so I'm glad you brought that up because we just got so granular on different things. But I think it's a perspective that I don't have enough information about, and I don't touch and feel and interact with well enough. I understand the macro of it, but definitely not the micro, I would say. And I really appreciate the insight that you've given. I think it's gonna be helpful for a lot of people. And thank you. I really.
Well, I appreciate you having me on, and obviously this video series is a fantastic idea. You've talked to so many different people,
Okay.
so many different perspectives, and that's what you need. You
Yeah.
need to hear, everybody is getting a different story about what's going on, and to be able to try and piece that together like some weird jigsaw puzzle of what's going on right now is incredibly helpful to a lot of people. So
Yeah.
kudos.
Thanks, man. Thank you. I appreciate that. Okay.